Let's put the spotlight then on Celesta Capital. The company is a deep tech-focused US venture capital firm, and they want to double down on their investments in India. With already investments in the likes of Arzu, Rizal, as well as Helify, we connect then with Arun Kumar, the managing partner at Celesta Capital, to discuss their India plans and lots more. Thank you so much for taking time out. To begin with, you're planning recently to raise a cumulative India portfolio from the current 15% to about 25% or higher. So what will be the total corpus that will be raised across funds and the India exposure?
We have about $1.1 billion under management in total. And as we go forward, we expect to have an increased focus on India. So we're not looking at specific numbers, but we're looking at definitely increasing our focus in India, where we have a number of very great opportunities. And you mentioned a number of them. I should also add one more, which is Ideaforge, which is registered to go public. So we think that there's going to be plenty of exciting opportunities here, which warrants a much greater focus from Celesta on India. Now, especially as we look at technology, we think that we are going to see a larger number of deep technology companies coming from India. We've seen quite a few, and these are in the areas of semiconductors. These are in some areas where you have high technology and biotechnology coming together, what we call bioconvergence. We see opportunities in applying technologies like IoT for the transformation of various sectors like agriculture and healthcare. So we are just looking at a very exciting range of opportunities, which warrants that we dedicate more focus and resources on the opportunities in India.
Yeah, so can you give us a little bit more of a flavor as to currently what the total corpus has been that has been raised across funds? And you've recently as well closed the fourth round. How much was that worth?
So we have raised four Celesta funds in the US. The total of that is $1.1 billion. And, in this business, every 2 years, you go out and you raise a large amount of money, which you then deploy for the following 5 years. So we, in the process of doing that right now, we are certainly seeing that India will be a big component of what we do going forward.
Okay, so clearly you're talking about doubling down on India and a lot of potential over here. Let's understand what exactly the average check size is going to be and what are the companies that are currently as part of Celesta Capital's portfolio in India.
So we are an early to mid-stage fund. So the check size initially can be anywhere from 3 to 5 million, and over the period of our investment, it can go up to 10 or 15 million, which happens over a period of a number of years. And that will continue. You mentioned some of the companies that were active in India, Ideaforge. I'd like to call out another company called StartUp, which is in the agriculture space, in the area of milk production. You mentioned Arzu in the retail space, Connect and Heal, which is in the healthcare space. We have a number of such brick and boat in the housing space, and housing is almost a limitless market in India. So we are covering high potential, large sectors on the one hand, where there's going to be transformation, and other areas where there's going to be very deep technology, which could include manufacturing, semiconductor design, and so forth. And what distinguishes us is our focus on deep technology. We are not doing we hardly do any consumer play, so to speak. We're really focused on areas where there is a very, very strong technology moat, where there's complicated design, where there's technology that is not easily replicable. And we feel that there's plenty of such talent in India to play in those areas. An area that's going to come up for even more attention is fabless semiconductors. So that's another area where we are going to play in, we believe. We've had some successes already in that space.
Okay, so give us an outlook, given that you're so closely tracking the space, talking about deep tech, AI, IoT. Give us an outlook as to what exactly is happening in the sector. Where does India stand?
There's an increasing focus on India's capabilities in technology. I don't know if you've been following the focus on what they were called critical and emerging technologies. So the national security advisors of the US and India got together a couple of months ago and identified a number of areas, including in telecommunications, semiconductors, where there are certain technologies that are critical to the progress of India and the US, in fact, globally. And these are areas where there can be a lot of synergy between what can be done in India and what can be done in the US. So we see a strong connection, a strong high bandwidth connection between the US and India in advancing in these technologies. And those span a number of areas, but certainly fabless semiconductors, a key one going forward. Telecommunications will be another one. And if we were to look further down, we certainly see a lot of potential in what we call bioconvergence.
But at the moment, in India, we are also seeing a funding winter play out. There are concerns looming large with respect to global recessionary fears. There has been a mass exodus of employees and layoffs. So it is a tough environment. At a time like this, how are you looking at, the startup landscape space? Do you think that these problems that are especially prevalent within the tech space are here to stay? Would you describe it as a cleansing of the system? Would you say that the environment is going to remain still more tough for the year ahead?
Well, I'll make a number of observations. First of all, I lived in Silicon Valley for 4 decades. So I've seen many of these ups and downs going, every decade we have some kind of an up and down situation. But one thing that I'd say I and my colleagues have observed is that some of the best companies are founded and built in these trying situations. So in some sense, the funding goes to the most deserving. The most deserving are often the ones who are the most resilient and will stick with their belief and vision during hard times. So in many ways, this is the right time to be investing in founders and companies that have a vision to do something really different and have the commitment to stay through it. I think the best ones are going to be chosen at this time. And by the time they've got their product and their solutions out, we'll be seeing a better picture globally. Now, I must say, while globally there are all these concerns about a slowdown, etc., we don't really see that much in India. In India, I must say see a lot more optimism. The growth seems to be more robust. So to some extent, India seems to be not afflicted as much by what we're seeing elsewhere in the world. That's one more reason to be focusing on investing in India and building some great companies out of India at this time.
And what are the other reasons? Why is it that India is looking so appealing at a time like this? Why are you looking to significantly increase exposure to this region?
Talent. Number one reason is talent, Indian talent. Remember, all large technology companies globally have very large establishments in India. Many of them have the largest employee populations in India. And they're not doing, a lot of them have some back office operations, but the important thing to remember is that a lot of great design work is being done in India. There are many teams that are global, that are linked with India. Often product development is led out of India. So the talent is here. This talent will play globally as they're doing today within the confines of large global companies. Many of those engineers will decide, hey, I can go out and build this for myself. And they will assemble a team and write a business plan, raise money, and build enterprises. So we are seeing that, and we'll see more of that. So the answer to your question is the talents that we have here in India.
Recently we've seen a number of valuation resets or markdowns, if you will. A lot of companies, Ola, Swiggy, etc., have fallen prey to this. Do you believe that even when it comes to the listed entities and even across a lot of these new age fintech companies, that now there will be a bit of a relook? Has the investment outlook now changed with this valuation reset?
But money is tighter, so that will be reflected in valuation readjustments. It's only natural. But most importantly, be reflected in greater efficiencies, in making money go further, in ensuring that the money that is spent towards value creation. So I think we'll see a lot more efficiency, actually a lot more increased capital efficiency as a result of the funding situation. Just like higher valuations happen when there's froth in the market. Valuation write-downs do happen when markets get tighter. That's par for the course.
Right, thanks for giving us that clarity, Mr. Kumar, and good to know that India is looking very attractive as an investment opportunity. Good to have you on Startup Central.
Yeah, good to be here. Thank you.